Let's bring in our market panel, Vital Knowledge founder Adam Crisafulli and Charles Schwab, senior investment strategist Kevin Gordon. Guys, good afternoon. Kevin, you say the labor data is murky at this point. By the time it gets clear, it seems like we're going to be in the holiday shopping season. So how much does that consumer boost or not matter here?
I do think it puts more of the onus on retail sales, so it's important, to look at that indicator, especially for this week. But as we move forward and some of the labor market data does get murky, because whether it's the impacts from the hurricanes, whether it's the impacts from anything union or strike related, it probably pushes you into early December, to your point, until we can get a real clear read on the state of the labor market. So far, so good. If you're going to look at the September jobs report and some of that sort of bucking the trend, whether it was for the unemployment rate moving up or whether it was for payroll growth moving lower. So I think that you're still in a relatively good state right now. It's just that you go through this period now where even data like claims, which we've become more reliant on over the past several months, you may not even get as clear of a signal there because you have spikes like you did last week, driven by maybe a couple of states, Michigan related to Stellantis and then North Carolina related to, hurricane effects. So I think that's going to be more of the important story from a consumer spending and a consumer health perspective, which, so far consensus is for retail sales to be relatively healthy, especially the core group that matters most for GDP. But it does put more of the onus on retail data. Yeah, valuation stretched, but we keep getting some numbers that justify it, including Adam Crisafulli, when we combine the good news out of the banks, their earnings over the last few days with the recent rebound in some China stocks where the full story, I feel like, hasn't been told yet. What did we get?
Yeah, so I think as far as having insight into the U.S. economy, there are a few sectors that have a broader look than banks. And so we've heard from pretty much all the major money center and regional banks in the last couple of days. And it wasn't that the Q3 results were spectacular. They were strong, but I think more importantly is just the qualitative guidance and messaging from management teams about what they're seeing on the ground. It was very much a Goldilocks type of atmosphere with resilient growth, fading inflationary pressures, just a normalization of the economy as you kind of get past all of the COVID excesses and distortions. And I think that kind of more than anything has really helped put a bit underneath the market, and it's helped catalyze a lot of these cyclical value groups more than anything. And you've seen tech, tech take a back step a little bit in the last few days because of it. So that to me is the most significant market event. It's just listening to these bank CEOs and what they're seeing in the economy, and how encouraged they are about just the underlying conditions.